Hey everybody, thanks for tuning in to the System Sessions class. I have asked Marcus Sykora, my good friend here, to come in because he wanted to share some valuable information that's going on not only with some hail damage claims, but also with some condo stuff that could potentially affect your transactions. So I'm going to turn it over to Marcus. He's going to talk about some things, and then we'll kind of open it up to Q&A at the end. So Marcus, what's going on?
Everybody, thanks for having me. I just kind of want to walk you through some of the stuff that I'm seeing. It's we just had a hailstorm come through our market area here within the last 60, 90 days. And I had a big aha moment whenever I was dealing with another realtor and they were trying to get a closing date set. And then the hailstorm happened, and then they were trying to get a roof, and then it almost lost the entire situation. So it's one of those things I thought, you know what? Let's reach out to the people that I care about and let's talk about some of the stuff, help navigate it. So what you guys have in your screen right now is you guys got an estimate. It is a legit State Farm estimate, and it's what's given to the customer. And I want to walk you through this estimate and what it works, and then how it means everything. I'll circle back around on what it means to you when it comes to getting the claim taken care of, hopefully prior to closing. So, so what you can see is if you go underneath that line, summary for coverage A and the dwelling side of things, you can see that there's a $28,483. Okay, and what that $28,483.65 is it's a situation where that is basically the total claim plus the material. That's what the material sales tax comes in. So the total roof on this house to replace the house on the roofs on the house is $29,574.18. Okay, so here's where it gets tricky. The next line is a line that says less depreciation and then less deductible. That's why they're in the parentheses, because they're subtracted. So the net cash value is going to be $22,839 and some change. So the way that State Farm works, and the vast majority of insurance companies that offer replacement cost services, is we pay actual cash value up front. And then when the roof is replaced or there's a contract for the roof, we'll release those benefits back to the named insured. Okay, that's a big deal. This is a new house. I couldn't find the example I wanted to because we released a check, but the depreciation that was held back on the roof that we had in trouble for, not in trouble, but like caused this scenario, was over $15,000. Well, hey, you know what? $15,000 is a real number, especially whenever you've got a closing date and you're not curious, and the buyer's thinking, hey, I'm supposed to get this new roof. The seller's thinking, how am I going to escrow $15,000 before the house sells? So it gets into a kind of a tricky situation. In this example, we got $3,800. So what I would say about that, what happens is once they get a contract for the roof to be replaced, State Farm will release that number. Okay, so that $3,800 will get released back to the customer. So in theory, the only thing the customer is going to get out of pocket is their deductible. Okay, now keep in mind, I'm just going to say this about deductibles. This is a $3,000 deductible, $3,800, or I guess $2,900 deductible. You can very easily, it's very normal for there to be a $10, $20, $30,000 deductible on some of the homes that we have in our market area. Now, typically the people that have those homes don't care, but I just want you to understand that there are sizable deductibles out there that if this goes down and there needs to be concessions for a new roof to get through closing, that's a real number that the customer is going to have to come up with. So keep that in mind. Okay. So in this situation, the reason why I wanted to bring this to your attention is on the front side, you guys got to make sure that we're plugged in or there's some sort of inspection on the roof, because what you don't want to do is you don't want to have this depreciation held out, the client not be able to get an actual contract for a roof to restore those replacement cost benefits, and then do all of those things and get it back to State Farm. And then all of a sudden have State Farm release the back to the insured before the closing date expires. Because if not, then the insured is out of pocket. Well, contractually, here's the other thing that goes on too. if all of a sudden we can't restore those replacement cost benefits, the closing happens, that's all of a sudden contractually a scenario where we may not be able to pay the insured the money we owe them to begin with because they don't own the house. So there's a whole lot of scenarios that can evolve around those replacement cost benefits that are owed to the insured in relation to the closing. And so we were up against that. And that's why I really, really wanted to bring this to your guys' attention, just to say, hey, if we're going to be dealing with a closing, we're going to be dealing with a listing, do we know the condition of the roof? Are we doing something about the roof? And if so, what's going to happen? Because people who buy homes expect there to be newer roofs on there with no damage. People who are selling homes don't want to pay any additional money out of pocket for the transaction to happen. So that's really why I wanted to do and bring that to your attention, is those replacement cost benefits. We need a little bit of time to get those out to the customer prior to closing date.
And like we were talking about too, Marcus, before we jumped into the class, talking about this in a listing appointment, or the possibility of getting it checked out, and starting that process early, maybe offering a pre-inspection, things like that are all value that you can bring to the client in order to help get that listing, but also benefit them with something like this as well.
No doubt. And if you're working with the buyer, one of the first things I would want to do if I were you is I would want to know what that inspection report looks like, or what are the possibilities, or how quick can we get one, in order to make sure we avoid a situation like this.
Mm-hmm.
It's a really, really big deal to kind of work through all of that to get that taken care of on the front side for sure. And like I said, these numbers are I mean, they're sizable, but they can be really, really, really big, because the way that actual cash value depreciation works off of, number one, the size of the roof, number two, the age of the roof. So those are situations, if you got a 10, 15-year-old house, there could be a lot of depreciation held out, which is a big number that you got to manage and work through and make sure is accounted for prior to closing. So that's what I wanted to bring to your attention for sure on the roof side of things. And also too, I want to point out this. Roofing, as you can imagine, in my world, in the insurance world, roofs are an enormous, difficult piece to navigate. And here's why. You can have an inspection report where they will say that there is hail damage. Okay. That is a factual statement. But you can also have an insurance company say the shingle is not compromised to the point that it needs to be replaced. So you also have a lot of situations where, just like everything in life right now, there's a lot of pressure on what these insurance companies are paying for. Okay. And so obviously I represent State Farm. So State Farm is the largest company in North America. 1 out of every 4 houses in Lake of the Ozarks and 1 out of every 4 cars at Lake of the Ozarks is State Farm insured. So there's some relevance here on who you're going to see potentially on these roof side of things. I've seen us be very, very, it kind of is like this big wave. Sometimes we give roofs away like they're just no big deal. Sometimes we get really, really particular and in the weeds. So you could, in theory, have an inspection report that says, yes, there is hail damage, but you could also have an insurance company say, hey, there's no, I guess, merits for a claim.
Mm-hmm.
Is what I would say. So, you definitely want to be prepared to navigate that as well, or whoever that house is with, if they're not satisfied with the claim, obviously, if they're with me or whatever, then send them back to me and I can help navigate. That's not your job to do it. But just be aware, it is a scenario that could arise that you could be dealing with.
Does anybody have any questions regarding the roof aspect of this situation before we jump into a condo? All right, let's jump into this condo one, Marcus.
Yeah. So condo insurance is it's kind of its own unique animal. And my value statement would be very similar to your value. Real estate at Lake of the Ozarks is different. Condo insurance at Lake of the Ozarks is different as well. And so anytime you get anybody that's buying a condo, get them to somebody locally. Obviously, I'd love the opportunity to work with your buyers or sellers or whoever, but it needs to stay local. I mean, I just can't stress that enough because people don't understand exactly what's going on. So we're going to walk through an example. This is a legitimate proposal that we've given a customer. Here you can see the quote is effective date May 31, and we're going to go through here. So this is on Port Royale there in Sunrise Beach. It's just one I just grabbed, no big relevance. And we're going to walk through these coverages here. Okay. So the first coverage is the most important coverage. Well, not the most important, but it's damn sure important. It's the building property. So this is the interior structure of the condo. Okay. So what I'm talking about is I'm talking about if, usually they say drywall in, studs in. I've heard a billion different scenarios on how to explain this, but it's everything on the inside of the condo that you see. It's cabinets, it's vanities, it's countertops, it's drywall, it's vaulted ceilings, it's anything that is quote unquote yours. And what we always try to work with is somewhere between $100 and $150 a square foot. So if in the event you have water damage, if in the event you have a kitchen fire, if in the event something happens, and we got to repaint, re-drywall, re-cabinet, re-floor, re-anything, this is the checkbook that State Farm affords to the customer. This is a big deal because what happens is if I go into the system, okay, and I put in, if I don't accurately calculate this based on square footage, that customer could be grossly underinsured. State statute says, okay, now what state statute says and what happens are two different things a lot of times. But what state statute says is that condo association is responsible for restoring that condo back to the basic unit condition. Well, that condo that person bought might have been overhauled 3, 4, 5, 6 times. It may not have the same cabinets. It may not have the same flooring. It may not have the same closet system. It may not have the same anything in there. And then you get to ask in the condo association, well, what is a base unit? And they may not know what that is. So all of a sudden, it's just this arbitrary scenario that we're going to be dealing with. And then the condo association is having so many claims and such large losses that in order to keep those things affordable premiums, because remember, those premiums are shared by every condo unit owner, these deductibles are $25,000 sometimes, $30,000, $50,000 deductibles. I mean, it's just insane. Then they also have to go into split deductibles on wind hail for buildings. So building one may be $1 million and it may be a 2% deductible on wind hail. So there's $20,000 on wind hail that they're going to assess down to the consumer. But we'll talk about how we get that protected here in just a minute. But that building coverage is so amazingly important because the last thing you want is all of a sudden you walk into your house and your drywall from your ceiling is sagging, touching all of your furniture. And then you call the association, and the vast majority of those people, if they're good management companies, it's pretty good. But some of them, they don't have management companies. Some of them is a volunteer board. These are volunteers. They're not accessible. They're not 24/7. They're not in a situation where they can give you good sound advice on what to do. And if you don't have enough coverage in that situation, you damn sure don't want to be in that scenario. Because it's a lot easier. You can see the annual cost of that coverage for $200,000 is $351. To me, that premium is the solution, not the problem. I'd much rather pay $351 a year to know that my second home investment or my rental property or whatever it is to me is protected if something were to happen, especially since I have neighbors usually alongside me for sure and usually above me as well. So that's a big scenario there. So personal property, that's all of the stuff. Moving on to the $75,000 there, that's all of the stuff that you, what I call, would move out if you sold it. That's your bedroom furniture, that's your electronics, that's your dishes, that's your towels, that's your clothes, so on and so forth. So technically, if I put $75,000 in there, the way the system calculates the building coverage, so if I put $75,000 in there, then it's going to calculate that building coverage for that. So you got to have somebody local who understands they got to dial that number up because it's a very, very low number. Okay. But the personal property is their stuff. Now, a lot of times people say, well, what about my hoist? Well, your hoist would be considered personal property. There's a better way to do it, but I just want you to know a lot of people say, well, what about my hoist? That's where that $75,000 comes in. Loss assessment, this is a huge deal here. This is whenever the association comes to you and says, hey, the deductible is $25,000. We're going to come to you and we're going to say, hey, listen, we're going to want to collect that $25,000 deductible back from the people who are involved. It's $13 a year. It's $1 a month to increase it to $25,000. If you're dealing with somebody that doesn't know the market area, they're going to have $1,000 there. It's $13. Once again, the premium is a solution, not the problem. All of a sudden, I get assessed because my neighbor had a water loss. It doesn't even affect me. They can turn in the claim to me or State Farm in this example. We can look at honoring that claim based on its merits. An assessment is for insurance-related losses. It's not for, hey, it needs to be painted. It's not for the decks are getting old. It's not for, hey, the parking lot needs to be resurfaced. That's not what it's for. But they're going to know exactly what's going on there. Okay. Liability coverage is $500,000. Nothing comes out of my office for less than $500,000. So you can see it's $26 a year. The base policy is $100,000. $100,000 costs $0. $500,000 costs $26. Once again, premium is a solution here. If you have a real claim we got going on right now, they were putting some new baseboard in their condo. They trim gun shot a nail through the wall. It hit a pipe. Guess what happened is the nail finally rusted out, spraying water everywhere. We got water all over us. We got water below us, and we got water on the side of us. If you only had $100,000 worth of liability coverage and there's $250,000 worth of damage, guess who's going to be paying or asked to pay for the other 150? It's going to be you. So to me, the question we always ask is, if you have your worst day, how much do you want to pay for out of pocket? And how much do you want us to pay for? Because that's what insurance is all about, transferring that risk to us. So you can see $26 is a good value there. But that liability coverage is what pays for all of that. Your primary homeowners, think just from a consumer side of things too, people always ask about liability. They don't understand. Like, let's say, for instance, this is your condo policy, and let's say you're out at a restaurant and you trip the waitress on accident and she falls and hurts herself, and next thing you know, you get sued. That's where your liability coverage comes, is going to protect you, right? Your liability coverage in your car, if it happens in your car, it's going to happen from there. If it happens in your boat, it's going to protect you from there. But anything else, it doesn't have to be in your condo, it doesn't have to be in your home. That liability coverage is going to be taking care of you there. Okay. The last coverage I think that's unbelievably important is that medical coverage. Medical coverage on the condo, very inexpensive. $10,000 worth of coverage is the most the insurance company offers. It's third-party coverage. So if Gene's over at my house having cocktails and Gene falls down and bumps his head and it was just a sheer accident, I can offer that $10,000 worth of coverage to Gene so that he can go ahead and get his medical bills paid and go get looked at. If Gene doesn't have health insurance, and all of a sudden he fell down and knocked a tooth out and he goes to the dentist and it's $2,500 and he doesn't have health insurance and he doesn't have any money to pay for it, well, guess what Gene's going to want to do? Gene's going to want to sue me or something along those lines. So that's a great coverage to be able, yeah, that would be sad, Gene, I agree. But that's great coverage to be able to have to offer the people that would be guests, grandchildren, in-laws. Typically somebody that's going to be at your home or condo are going to be somebody that's important to you. So even though they're not first-party coverage, that third-party coverage is huge for them. So that's a big deal there. And then, of course, you get into deductibles, discounts, and so on and so forth. But you can see where the premium is the expense. That's where all of those coverages need to be added, because all of the other people that are outside this market area, they don't think or understand the coverages that are recommended. So that's why it's unbelievably important to make sure, your consumers have what they have, because the more advice you can give them or the more you know about it, the better value you can be to the people who are trusting you.
Also, don't quote, right?
Yeah. We hear a lot of times, hey, you know what? So I give this proposal and it's $658 or whatever it is on an annual basis. And then a lot of times we'll hear, hey, but my realtor said it was only going to be about $250. Well, that's funny, because you should have told your realtor that you should have bought the house for only X amount of dollars. Why'd you pay that much, right? Just joking. But no, it's a situation where you just don't want to get in that situation where you create an expectation that can't be fulfilled. I can make the proposal $250, but the only way you're going to reduce the premium is to reduce the coverage. And that's not what a true risk advisor should be doing. They should be curtailing things to you, to your situation, to make sure that you're protected in the event that you have your worst day. So that's what we really try to focus on.
Was there anything else on this one, Marcus?
Yeah, I think that backup or sewer drain, that's a big one. You can see underneath policy options and endorsements. Yeah, $27. So people say, well, I'm on the 4th floor. How can I have a backup? Well, there's a service line for every floor of the condo. So there's a service line for the 1st floor, 2nd floor, 3rd floor, 4th floor. It can back up the top unit because there is a service line that is used for that. It's $27. The last thing you want to do is have gray area or what they call gray or black water in your unit and not have coverage for it. Once again, very inexpensive, but it's an endorsement that's important for them to be able to have. So it's pretty straightforward. It's very simple. It's very easy, but it's just so overlooked a lot in the industry. And that's why I wanted just to be able to bring some things to your attention.
It's a good point. Does anybody have any questions? You covered a lot.
Yeah, there was a whole lot, and I'm not a soup to nuts kind of guy, and there was a whole lot of just so I apologize for that. I like to story sell a little more.
No, I like it. I just I studied insurance before I got into real estate, and I couldn't make it through that book. It was so dry. So
it's unbelievable dry, and it's contractual, and that's what people need to understand. You can take your emotions and you can park them because it's a contract. And if you don't have anybody, just like your real estate contract, if you don't have an advocate for you that's helping you navigate the contract, how are you supposed to know what endorsements you need?
Right.
How are you supposed to know what coverages you need? How are you supposed to know the amount of liability coverage you're supposed to have? Building coverage, personal property, navigate a claim if you have a hailstorm. I mean, that's what you get with us in our office. And it's a situation where if you don't have that person, we would love to be the ones you trust for that. But if you do, make sure that you're reviewing your stuff. It's important. Life changes. Policies change. Options are available. Go in and systematically visit some of this stuff.
No questions? All right, guys. Well, Marcus, thanks so much for giving us all this great info. If you guys do have any questions or you're watching this later and want to ask Marcus something, please reach out to him. Marcus, what's your email again?
It's Marcus at Marcus at Lake, SF is in short for statefarm.com.
Awesome. All right, guys. Well, have a good day and reach out to him if you have any questions. But I thought this was really awesome.
Yeah. Thanks, guys.